The ancient equity, gold, is now trading at an all-time high. But is this it for this time, or is there more to be expected on the upside? Here are my technical predictions and my golden game plan. When markets crash, gold and precious metals have a historical track record of performing well. Yet owning gold on its own won't statistically make you any richer over time. The benefit of gold rather lays in its time-tested intrinsic value, that when all else fail, whether fiat currencies or entire nations, gold perseveres. What this means is that it simply maintains its spending power, and that is the superpower that makes it a widely popular hedge when market bubbles burst and economies default. But first of all, we must make one thing very clear. Just because gold is a hedge to falling markets, it neither means it will move up proportionately nor reactively. Sometimes it might, but it's not a given. Simply put, this means that gold won't necessarily move up at the same times as markets go down. Neither does it mean that gold will go up or down at an inverted value. That would be much too easy, and such gap would be covered in no time. If we look at the devastating month of March, when almost all markets went down the drain, some may have simply assumed that gold flourished. But it didn't. Instead, it took a dive too. Not as bad as most indices perhaps, but still a solid minus 16% move, which at least is a big sudden move for gold.
Ah! It's not a liquid! It's a great many pieces of solid matter that form a hard floor-like surface! Ah!
It is famously said that a certain quantity of gold would buy you a nice quality piece of toga during the Roman Empire, and that very same quantity will buy you a nice quality piece of suit today. Last week I finished reading the old Pompeian philosopher Lucretius' book on the nature of things, the Rerum Natura. Lucretius Carus, apparently, and I always thought his name was Kurt. Lucretius Kurt. Now, in this piece that dates back more than 2,000 years, Lucretius talks about how copper used to be more precious than gold due to its widespread applications, and that gold in fact was quite useless for most practical tools, and that it was rather a mean to display power, wealth, and social status. Sure, gold is used in a lot of productions and technology these days, but so is silver, copper, and other metals, precious or not. It seems to me that gold is more about its social narrative than of its actual practical value. Of course, I'm fully aware of the finite supply of gold, one Olympic swimming pool equivalent apparently, at least from what I've read, and that it comes in much shorter supply than that of copper, silver, and so on. But it yet proves that the social narrative is still prevalent, just like Yuval talks about at length in his Homo Deus book, and that we accept this notion without much contemplation. I won't get any deeper into the fundamentals of gold for now, as I don't know enough to teach about it, but for those of you who want to learn more about gold, I do recommend you to listen to Mike Maloney. Having said that, let's move on to the technicals. The golden technicals. But before we get started, do note that nothing in this episode is financial advice. And if you wonder why I keep on saying this over and over again, it is because there are grown-up babies out there who don't want to take responsibility for their own lives and actions, but who rather need someone to blame their own shortcomings on.
But I don't want to have that fight with you.
Hey,
all
it's
right,
okay.
We'll have another fight with you.
Leslie, it's okay. In the meantime, I'm president and you're not.
Those are the very same category of people who sued a local hamburger joint after getting fat from their daily visits, claiming that they were not alerted about the weight-gaining effects of junk food. Now, let me be frank. Gold shows great technical strength. It's been trending for 20 years and its momentum is confirmed by the rock-solid EMA 200 on the monthly, the strongest of the strongest. And neither does it take a genius to realize that an ancient equity that now trades at an all-time history high is gung-ho. It does show technical tendencies for a further great move to the upside, and I am looking at a technical long entry. But for the sake of clarity, let's break it down. Now, gold has gone through several market cycles. Looking back at the very beginning of my charts, it traded at a distribution in 1980, followed by a long markdown, an accumulation around the IT crash of 2000, upon which a new cycle began. The big question at this moment is whether this 6-year-long accumulation phase between 2013 and 2019 was the main one, or if it was simply an equivalent passing of event to what happened between 1982 and 1987, upon which the price rolled over and was halved once again. One thing that does concern me for further upside is the ludicrously high RSI on the monthly. For before proceeding higher, if that's what will happen, some sort of a correction would be fair to assume. It would also constitute a sign of health, strength and consistency. Otherwise, if gold were to simply go nuts from here, the entire prospect could very well turn into a giant rubber band that faces the risk of breaking. If we look at the RSI moves due to the March 2006 and February 2008 corrections, we see that they were intense. If a retest of the support level either at 1780 or 90 or around the previous pivot top at 1910 were to be accompanied by a greatly declining RSI, one that still hovers around in a strong bullish red RSI channel, either of those levels would likely be ideal entry spots for a leveraged long. And a long prospect would be even juicier if a correction were to establish a cup and handle formation. Presuming that the top at around 2080 was the peak for now, if an outbreak were to take place at either of the support levels, the technical targets would be at around 2940 and 2815 respectively. Now, if we pull a Fibonacci retracement from the previous top at 1910 and all the way down to 1138, we see that the just mentioned technical targets both fall somewhere between the 1.618 and 2.618 Fib levels. This is nothing unusual, quite the opposite. As a matter of fact, you will rarely see any 2.618 targets being reached as a first impulse. Neither will it provide too much of a technical resistance level. Instead, what you will often realize in cases like this is that the real resistance level rather lays between the 1.618 and the 2.618 Fib levels. What we do is to draw a Fib retracement between those Fib levels in turn, and what you will ever so often find is that the technical targets will most often align at the 0.618 Fib level. So too does it here. And to compare this example to another stock that behaved identically recently, we can look at Plaid, where the price bounced exactly at the Fib 618 between the Fib 1.618 and 2.618. The reason why this is so, I don't know, but it's a frequently recurring outcome. Now, here's a side point where things get truly interesting. If we look at gold from an inflation-adjusted point of view, we see that we've already had a cup and handle outbreak. Based on this, we already have a confirmed technical outbreak, one that front-runs the regular charts. And such outbreak is also supported by the fact that we may very well be in the midst of a 5-way Elliott wave impulse, starting from the 2000 pivot bottom. Moving on to the RSI. I set up the RSI lines exactly as I taught in the RSI trilogy. If you haven't watched them already, I strongly recommend you to do so, as they may very well be the most important episodes on this entire channel. Now, based on these levels, we see that the RSI made a clear touch on the upper bearish blue line in October 1980, which was immediately followed by a 57% decrease. After this, gold entered a 25-year long sideways range, flickering back and forth without neither a long-term trend direction nor determination. In 1993, RSI signals began to emerge on the weekly chart. Gold generated a lower bullish red touch that was then countered with 3 clean upper bearish blue touches. This amounted to some conflicting information before the gold price, not too unsurprisingly, proceeded down. We then got 2 accumulational buy signals that were both stopped out as the RSI closed below the lower bullish red for more than 1 bar. Then, in March 2000, we got a buy signal on the lower bullish red at $258, very close to the absolute bottom, upon which the price really took off and generated a distributional sell signal upon the upper bearish blue touch in November 2011 at the majestic price of $1,787, just 6.5% from the absolute all-time high. We then got an accumulation of buy signal on the lower bullish red that was eventually stopped out. However, upon classical trading, it should at least have reached its first profit target. The RSI gave us another buy signal in November 2018 at 1206, upon which the price again took off like a bloody spaceship, and now it is trading at an all-time high. The reason alone why I bring this up is because gold indeed qualifies for RSI signals and is something that might prove to be the most valuable long-term trading aid when dealing with gold. To sum it all up, gold looks very strong technically, and my long-term game plan is to position myself for a leveraged long either at a retest of the previous top at 1910 or at the strong 1780 or 90 support level. This all comes down to the daily, 4-hour and hourly charts for an ideal technical entry spot. An outbreak from either of those levels would confirm a major cup and handle, and with technical targets at around 28 to 2900. On top of that, such passing of events would give the monthly RSI a chance to cool off a bit and for this steep price increase since the summer of 2018 to recharge for further upwards movements. This would rather be a necessity for a sustainable move to the upside in which we may be in an Elliott 5 impulse already. Until we get a correction, I will stand by the sidelines and keep a close eye on the price development. And for future references, I will use the weekly RSI lines as leveraged buy and short signals, as they have already proven suitable for gold. This may prove to be the most golden tool of them all. That was all for now. Thank you and goodbye.